Hello traders, this is Imi from iTradeAIMS.net, AIMS stress-free trading. Let's talk about German 30 again today. So as some of you might know, we trade, or I trade iTradeAIMS. I trade the London Open session using the DAX 30. On Pepperstone it's called German 30. On GKFX it used to be called DAX 30. So if I'm not on my spread betting account with IG and I'm using Pepperstone, then I will use this German 30, and every morning at 8 o'clock UK time at London Open I trade. Now the market opens at 7 a.m. which would be 8 a.m. for Europe, but that's where the spread is a little bit higher. And even when the spread was not higher back in the days, we still used London Open because that's where everything starts to move. So let's have a quick look at the hourly chart. So the hourly chart was showing that some kind of a 3-4-5. So you have a 3 up, a 4 down. The 4 down is also a 3 down. It's a 3-3 situation, so I couldn't really trust it. Now, that actually means that the pullback down was more than the purple. The magic purple line, right? So if it's more than purple, we don't consider it as that, but Elliott wave wise, it was still a 4, but that doesn't really matter. Just a quick look. When the market opened earlier, it went up. And by the time it was London Open, which is this, around here, market had already gone up. So let's go to the M5 chart. If you look at the M5 chart, the market had created a strong 3 up, and it was going sideways. Again, it did the same fractal geometric thing. Just like the higher time frame was doing its own fractal, similarly M5 was doing that same thing. It came down and crossed the purple, so it became a setup 0. If you were trading the M5 chart, this was your setup 0 going into wave 5, which you could have calculated in such a way as well, to kind of do this and find out where it's going to end. When the pullback is more than the purple, most of the time wave 5 will kind of end around wave 3. In this occasion, it's a perfect wave 5, can be considered wave 5 because it did match the rule, whereas which is that a wave 5 is wave 5 according to our rules. The way we trade Elliott wave is that it must break the high of the previous 3. Why? Because that creates that divergence, and when it diverges, that's where you consider it as wave 5. I had a comment on my most popular video of 10-second Elliott wave. One of the guys said, another guy who doesn't know shit about Elliott wave. Yes, absolutely. I don't know shit about Elliott wave, and I don't want to. But I know one thing. Elliott wave is the structure of the market. And if you try to count the waves, you will get lost. Nobody knows how to count it. I know there are a lot of people, Elliott Wave International, blah, 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 they do all these elaborate counts. That's just, it's deceiving yourself. You can't really properly count everything correctly. It's a subjective kind of approach. We know that the market moves up, down, up again. And that's how I call Elliott Wave. This is how I define Elliott Wave. So when somebody asks me, can you put it in the simplest terms? I say, Elliott wave basically is this in one line: push, pull, push again. That's it. It does not guarantee you that at the end of the 5th wave, it's going to turn around crazy and it will go nuts. That's what Elliotticians look for. They want to do these counts so that they can pick those tops and bottoms for reversal and stuff. That's bloody awful. I know it, and that's what I teach to our members, and that's our whole kind of thing in AIM stress-free trading. But anyway, let's go to today's trading. So today, when the market was at London Open, obviously this is where the London Open, so I'll be looking at the M1 chart. And let me just delete that. So I looked at the M1 chart, and M1 chart was showing, okay, after the strong move up on the M5 at London Open, it was showing me that it was probably going for a 5 down. Now, because I knew that the hourly chart was up and the M5 was up, I did not trust the formation suggesting price will go down here. It wasn't a setup for me anyway. It wasn't, even a low bot trade was not available here. If I wanted, I could have traded, and I wanted to do it, but I didn't. This would have been a very good trade, but I was watching it here and waiting, hoping if it would turn into a hunt signal. It did not turn into a hunt signal, but technically it is a hunt signal. Well, technically it isn't, but it could have been only if there was one thing that is missing on this chart, which I'm not going to tell you. I'm sorry. But members, you know it, right? What is missing? Hint, something here. Anyway, so if it was, then this would have been a very nice, lovely 3R trade. Now, here is a cherry signal. It's even a PC. I did not take it. And the reason behind that is I want my cherry to be not inside a tight box. Okay? And I don't want my cherry to be second cherry after I've seen the push, pull, push again. But even if I took this trade and I got stopped out, I would still be, I won't regret it, because I know that in order to make money in Forex or in any trading, you don't rely on the result of a single trade. And that is why we don't risk everything on every trade. So after that, I was watching, and I thought, well, forget it. It's not really creating that setup. So I just let it, and I went to the cafe to work on something that I'm creating. And I was working in collaboration with someone else as well. And then I saw this. Now, if I was trading the fruit, if I had the fruit method, or if I quickly put the fruit template on it, this would have indicated a really, really powerful, beautiful setup. Do you want to see? Okay, I'll show it to you. I'll show it to you. Where is it? Here it is. So can you see that? Let me zoom out a bit. So this is where that setup was when I said I didn't take it, because the purple was inside and blah, blah, blah. And I didn't have a clear 3. And I thought the market was going up. On M5 was showing market going up. So it comes here, goes up, stays within this range, comes back to it, and look at that reaction. A strong fruit candle. Strong fruit candle. You take your entry there. Then you have your add-on here and your add-on here. And baby, this is beautiful move up. Fruit. Okay. I don't tell this, but I'll tell you. So with the setup and the hunt, which is for stage 1 and stage 2, we focus on not trading wave 3. You get this? We focus on trading wave 3 in a different dimension. So, and this is true with Elliott Wave. Something is always half true and half a lie. So Elliott Wave is the structure of the market, but when you count the waves, they are 50% right and 50% not right. More on this later. So when I say we trade wave 3, even in hunt and the setup, we actually don't trade it, but at the same time we do trade it. Why is that? Because we trade the wave 3 of the 5 times higher time frame. Now it sounds complicated, but it's actually not. So because we have simplified it. So if you just so when you trade the setup one and the hunt, you won't be looking for waves and you won't be counting them and stuff. That's the thing. But by following the entry rules, the setup pattern, you will automatically be trading the Elliott Wave without counting it and stuff. So to that guy who said, another guy who don't know shit about Elliott Wave, thank you very much. I know. It doesn't matter. You don't need to know what is the count. What you need to know, what you need to have is a setup, a system, a set of rules that actually keeps you in line with the structure of the market, which is the Elliott Wave. And that is what we have created. The setup one if you take the setup one, you will automatically be trading far better the Elliotticians, far better than them. They will be doing their counts and all that stuff. You won't be doing your counts. You will be following the rules, the entry, exit, trade management rules of the setup one pattern. And at the end of the next 100 trades, when you go on and put them on your chart and show it to any Elliottician, they will tell you, oh, this is a perfect wave 5 you traded there. Oh, that's the perfect wave 3 you traded there. Oh, that's a perfect reversal you traded there. And you'd say, no, I didn't. None of that. I only followed the rules of the setup one. But anyway, so this is fruit. My rant again. Sorry about that. So good angulation, and it goes up and all that. But we don't want you to start here. We want you to start at the setup one, which is coming. You might have seen it. So it's going up and down, right? Now, important thing about day trading, especially the shorter time frame, is to understand that when, see this, comes down, right? From here to here, that's one wave. Then watch what happens. This one is higher than that. Now you don't know which one is your impulse. If this did not go all the way up here, if it was around here and did not break the high of this, I would have gone short here. But because it did, I wasn't sure which way, so I left it. But here's where hunt kicks in. The hunt method relies on these quick, sharp breakouts within the waves. So here the market is going kind of sideways, and then it breaks out, and you can see that this candle and then this candle, these are impulse candles. You see this? Wiki, can you see this? The waltz pattern going on? Trend candles. They are stronger. They are clearly bigger directional candle than these ones. Candles, sorry. And then what we do, we wait for that little pullback. But that pullback is a controlled pullback. It's not a crazy pullback. It doesn't go above the green line. It doesn't go above the red line. It's created its own new box level. And then there's a supporting something on AO that we utilize to take the hunt signal, but it's not here. The hunt signal has not been printed. Obviously, you don't take it. But so now you look at it, and now you see that this wave started from here and ended up here. Now you're monitoring whether the pullback is a pullback that is accurate for the setup one. So we're waiting, and around here, as you can see, pullback is quite impulsive. Can you see? It's like quite an angle up. Let me just delete these ones again, so you start draw again. Now ideally, when I see, not that one, change it. When I see market do this and then pull back up and then goes back down, I call this the push, pull, push again. So that's Elliott wave inside. This represents the corrective wave, the wave 4 of this impulse wave. So if this is 3, that's the wave 4 of this inside. Now this rule, keep this in mind, and we teach it inside the members area, that your next wave 4 of this time frame, it's supposed to stop around this level. It can go a little bit up, further up, that's not a problem. But it should ideally stop around this area. But in this occasion, it kind of stopped here, and it went up there, then came down, bounced around these levels, and went back up. So how do we avoid it? We have the purple rule. When price goes on the other side of purple, that's it, setup one is ruined. We look for something else. Simple as that. Here, what you see is that, come on. Market dashes down, pulls back all the way up. Now this breaks the fundamental rules of Elliott wave, that wave 4 must not penetrate the high of wave 1. So this would be your wave 1. That's where normally the box is created. And this would be your wave 3. And then that will be your wave 4. Now this must not go above this. Now, do you have to be doing all this analysis for every trade? The good news is no. You know why? Because all of this information is embedded inside the concept of setup 1, which I'm going to show you in a few minutes what exactly is a lovely setup 1. Now, knowing that, following the rules, this is not your setup 1, you leave it alone. You go forward. Market dashes down again. Bounces around this area. Fruit concept I kind of explained to you, don't need to know that, is for stage 3. If you knew that, it went up. But for us, now that we had identified this area, see, we saw earlier, and this is what we do. This is the little bit of analysis that we do. Price is going up, down, try to break this, doesn't break it. What is it? It's sideways. But then you can visually see that it broke that. It broke that range and went up. And that's exactly what I was expecting. Why? Because, let's go to the M5 chart. When the higher time frame, when the higher time frame, or when the trend is up on the M5, the moves on M1 are always going to be stronger in that direction. So the trend is up. Look at this. When it was pulling back, it was a nasty wave 4, right? But when it started going into the wave 5, can you see here? It was strong up. So what we do is that we trade inside the wave 3 and the wave 5 of the M5, and we avoid inside the wave 4 of M5. It's that simple. If you just get that concept into your head, your trading will dramatically change. Anyway, so I walked away. Well, I was at house at that. I think I was at home at that time. No. Around this time, I went to the cafe, and as I sat down, I saw this, and I thought, that's pretty nice. But at that time, I looked at it and I said, you know what? This has gone too far up. This has gone too far up. Now, although I have a nice hunt signal, I said, I think it's lower probability, probably a B trap. So I'm not going to take it here. Well, I was wrong because the risk was low. But even less than 6 pip stop loss, it would have hit my 2-hour target like a joke, like it did yesterday. But that's all right. It was my call. I like to play it safe. Now, if I had already 2-hour profit under my belt at London Open, I would gladly have taken it. Why? Because it would have cost me 1 hour, and I would still have walked away with 1 hour for the day. 1%. But guess what happens afterwards? Because now I can't look away from the screen. Do you know why? Because I have a clear 3. Forget about 3. You know, those people who get an allergic reaction to Elliott wave, you know, suddenly their heartbeat races and their lips are swollen and they can't breathe and they're about to, what, Elliott wave? Don't touch Elliott wave, please. Keep the Elliott wave away from me. If that's your case, forget Elliott wave. Look at this. This is the biggest peak. Just look back. That's your biggest peak. Look at the price. That's your strongest move up. Now what do you do? What you do is that you wait for the gator to sleep. You wait for the AO or AIMS wave or E wave to come and cross the 0 line. And when it's crossed the 0 line here, alligator is sleeping. It's about to sleep. You're waiting, and can you notice the difference? Box has darkened That is because we do this shit. The box has an inbuilt code, thank you, Steve, where you can tell the box to say, these are the number of pips. When the box is tighter than this, can you color it differently? So I've got it slightly darker. So now it's telling me that this box is very, very tight. It's low risk. So if you take this trade, it's only going to be 10 to 13 points of risk. And you can easily get 26, 20 pips profit. Now here, I know I'm the expert. I could have taken it, but I didn't take it on this occasion. But this gave me a thought, and I thought, there might be some people sitting there in chat room thinking, is this a setup one? Of course it is. It's perfect. You got the blue dot, you got tight box, you got gator sleeping, you got 3-4 happening. You got perfect. You don't have to do this. You don't have to do, what I'm doing right now. You don't have to check fib retracement and stuff, because we did all that in the research stage of it. You don't need to do that. You have to make it visual now. I don't want technical analysis. We want trading chaos. We're using this pattern. So you want it to be visual. You got the 3, you got the 4. Comes here. Purple is nicely spaced. So purple is gonna be all the way up there. You take the trade, and it turns into a rent. And the new trader's thinking, oh no, I took the perfect setup one, and he's still a loser. For a new trader, it's a disaster. He's thinking, okay, so when I was not following my rules, when I was not trading correctly, I was losing money, and now I take the perfect setup one. Imi said that this has got 66% win rate, and I still lost. The answer to that is that the probability of the next single individual trade is completely random. You can never tell at this point whether this trade will be a winner or a loser. What you can only tell is this a setup? That is our famous question that we ask. Our motto is 2 things. A setup is a setup is a setup. Take the setup. The question only is this a setup? Which means, have I followed my rules? Am I seeing the picture correctly? Yes. This is a 3. This is a 4. Forget about 3 or 4, sorry. This is where the impulse wave up. I can see the gators opened. I can see a big peak on AO. Then I've seen it and it's crossed the 0 line against that, and gator has slept. Purple is correct. There's a flow chart that we give you that you can study, and then first it's like a few steps, but then when you do it like 20 times, it becomes part of you. Human brain is fast. You just look at the picture and you know if it's a setup one or not. You take the trade. You take the trade. When you see this, you take the trade. You have your pending order there. You have your stop loss here. Your target point will be at target zone 1. Watch my video about target zone 1. And that's the second bit of our motto. Keep working towards target zone 1. And when you take this trade, you are working towards target zone 1. So what I did, I went to my Slack trading room. I think here. Yeah, here we go. I'm going to bring it. Bring it. So I said, if you took this setup 1 and it failed, it is absolutely fine. Because if you continue to take setups that look like this 6 out of 10 times, it will bring money. And that is what trading is. You can't win every trade, but you have to have an edge. So the probability of the next trade is random, but the probability of the next 20, the next 50, or the next 100, in our case we have found, is the probability of the next 20 trades, or the next 50, or the next 100, is that 66% of these type of trades, these type of setups, if you take them, 33% will result in this. You'll take the trade, and will go down and you will lose 1%. But here's the kicker. You will pat yourself on your back and say, well done, Imi. You traded the setup one, and that is what will make you money. Why? Because at the end of the next 100 trades, 66 of them would make the 2R or 3R target. And the 33 of them will lose 33%. And the 66 of those trades will make you about 60%. So you lose 30% in the 100 trades, but you will make 60. So in every 20 trades, you will make 5 to 10%, risking only 1% per trade. So, as I was saying that, let me bring that chat again. So Ganesh said, I just did and failed, but I'm in my first T20 or not caring about results. Great learning. Now I know he's right, but at the same time he's wrong as well. We do care about results. Okay, let me just go through my message. Because after countless tests and live trades, we have found only one answer. Any pattern that repeats itself has a certain percentage of winners or losers. And you have to take the setup in the now. You see, this was in the now. You could not tell the future. The future will be determined by the forces that are in play after the point you made the entry. You are a winner. Whether your trade is a loser or a winner, you are a winner as long as you follow your plan. And so I say to Ganesh, it's not that you don't care about results. You do care about the results. It's a training to understand that trading result should be a composite of 20, 50, 100 trades, like I explained a minute ago. The probability of a winner or a loser for the next trade is completely random. But the probability of wins and losses for the next 20, 50, 100 trades is a pretty damn good quantifiable figure. So no matter how many people take this challenge of T20 principle and they take their 4 or 5 batches, they constantly keep coming with the same results. 66% winners. And I can guarantee you that if you follow the setup one and if you follow the T20, you will not lose money. Your account will not go down. You'll either stop losing money or you'll gradually keep growing your account. You can test it. And then what happens? So Edward asks, Amy, can I please double check with you? Purple is just clipping the AIMS box but not intertwined with Gator. Is this still a valid setup one? Well, I will answer in a bit. So I said, trading success depends on discipline, and discipline is hard, if not possible, if not impossible. Trading discipline is hard, if not impossible to enforce. So what's the trick? The trick is to learn to understand that a trader needs to develop a probabilistic mindset. And that even a losing trader is a winner in the long run, like I explained earlier. We need to turn the definition of winners or losers. We have to switch it. You don't become a winner or loser because of the result of your trade. You're always a winner. So, I said, my answer is this. If you take the first setup, do take the second one as well, but not the third. So, if you have a setup one, you took the first one, it was a rent, not a problem, take the second one. Your stop loss will be here. See how it hits purple? See how it hits purple? Goes up. So I posted my trade and say, well, that's my answer. If it wasn't a perfect setup one, I wouldn't have taken it, right? I took it. Of course I did. Here's the trade. Took the trade. Right here, target zone 1, up there. Let me draw it again. This is how you draw it. Start from where you think is the start of this wave, clearly, to the peak, up there. And then the bottom of this corrective wave, wave 4, connect that there. And there you go. That's your target zone 1. I normally put my target point just below there. This was... it's a lie. It's like I made it up. Look at this. Can you predict the market like that? Like, you know, oh, the market's just going to stop there. I know it. You know, I knew it, let's say, 20 candles ago. No, I didn't know it. And at the same time, I knew it. Do you know how? Probabilistically. 8 out of 10 times, price will hit or enter the target zone area. 8 out of 10 times, wave 5 will enter the target zone 1 area. And now in Forex and in trading and anything, when something around 4 or 5 pips, it's considered as hit. It's a fuzzy zone. There's a jelly around this. So I will consider this like, you know, it's like a pip or two below target zone 1. To me, this is considered as target zone 1 hit. And that's why I put it just under it. So did I predict the market pretty damn well? You bet I did, to the last pip. But can I do it every time? No. Can I do it most of the time? Yes. So if you follow the setup 1, and then you put your target point up there. So my stop loss was somewhere around here. 8 pips, I think. You should be going for 13 below the other side of the box. And if you did, that's your 2R at 26. So if you risk 1%, that's your 2% profit. So if you lost 1% here, and then you made 2%, you went away with 1% profit. If you do that every day, you will quadruple your account in 6 months. And so once you've done that, I think I posted something else as well. Let's go through that. So then I talk about this, and yeah, I posted my picture. I said, well, I'm in the cafe. I had a coffee. My head is buzzing. Oh, God. Coffee is a bad thing, but it's so much fun, especially when you're not used to it. So I went there, relaxed myself. I'm sat here in the cafe with my laptop and suddenly saw the setup 1, could not stop myself, took the trade, even though I did not take the first entrance. But that's okay. Sometimes I do take it. At my stage, all sorts of crazy stuff happens. You know, sometimes you just have that feel for it. Like I had, so in this video, I've touched upon many things. So here I had the feel for this to say, nah, I don't want to take it. I was wrong. Here, nah, don't want to take it. I was right. Here, yeah, very good setup 1. I was right. So even if you do trading in stage 3 intuitively, there'll still be a probability. Sometimes you'll be wrong, sometimes you'll be right. And that's why when I mark my trades, I call them, I have this rating of intuitive. So if it's an intuitive decision, I counted it. And I found out that by half the time, or about 60% of the time, I'm right. Intuition is like a coin flip, to be honest. Anyway, so that's what it is. I thought it would be a 5-minute video, but I explained everything. I like talking about this stuff. I like setup 1. I like this trading thing, and I hope you do as well. So this is setup 1.